All right, and a wonderful good morning to everybody. If you don't mind, if you would please let me know in the chat if you can see my screen and hear my voice, that would be fantastic. Top of the morning to you. Top of the morning to everybody. Yeah, we're going to get this thing going here. Unfortunately, it looks just like the move has already happened. We were all over it inside the Discord. Unfortunately, sometimes these trades take place before we go live. The first actual move was right here on Bitcoin when we made a fresh daily low. We've been watching this weekly resistance level at $19,264 for a while now. I've been telling people that that's the level at which I want to be a buyer. Yesterday, we didn't really mess around with it too much. We did come into it a little bit during last night. You can see there you went down. Well, first early in the morning, and then it broke back above it. We came back in and tested it yesterday around the Asian session, and then we made a fresh low of day right there at 6 o'clock in the morning. That's basically about when I took my position. I took a long position. My stop is setting right there under the $19,240. Right here is your high of day. This is your daily open. So as long as you're trading above 19,332, you are green on the day. Why was I looking for a bullish trade? Well, simply because, there's a rumor out there. And although it's not a rumor where the Fed is going to basically change their monetary policy 180 degrees like they did in October of 2021, it still is a rumor. And that rumor is enough to make trading decisions on. You can see here the DXY pushing down into a fresh daily low. Let me make sure about that. No, right there is your daily low. So not quite yet, but it does appear it is wanting to. So yeah, nice move to the upside here. It did look like this morning we were going to have it come right back down and stop us out, but it went right to the weekly resistance level. That is objective and as perfect as you can get, ladies and gentlemen. You're not going to find much better entry criteria than that. So we're just sitting here in long positions waiting to take profits. Probably wouldn't be a bad idea to go ahead and do that because once you make a fresh low of day on the DXY, it could potentially get a bounce. But here's the thing. I mean, it's trending lower. I got short on USDJPY Friday. I also took a long on Bitcoin on Friday. That long is still on, and I took a new long position this morning on the Tether side of the Bitget exchange. If you want to trade on Bitget, they offer the lowest trading fees than any other exchange, and they have no KYC, putting funds from cold storage onto the exchange to make some trades, and then bring the funds back off exchange seamlessly and simple. No KYC. There is a description in the link. Make sure you use code XTSC. That is X-Ray Tango Sierra Charlie. Getting ready here to push up into the high of day. Make a fresh high of day. That would look really good. Now, the main reason why I was looking for longs this morning on Bitcoin is simple. We were red on the week. All right, let's go over here. So, same scenario, same thing that I often talk about on these live streams and in all of my videos. For years, I've been doing this on YouTube, and I say the same stuff consistently over and over and over again. A lot of times, the first part of your weekly range expansion is the fake out move, and typically we look for the low or high of the week to be formed on Tuesday or Wednesday at the latest. Now, that doesn't always happen that way or that simple, but this morning, let's get rid of the open, high, low, and close on the day. Here is the weekly resistance level. This is the level that I was looking to get long. This is where we were this morning. So as you can see, here is your weekly open. It did have a very small move to the upside, and then the rest of the week, all the way up until this morning, was down. If I am looking for this breakout to continue, this would be a good spot to look for long entries. We discussed all of this inside of the Discord. So there it is, boom. And if you're going to see a green weekly candle, there is a really good chance that 19,264 will be the low, or the low end, if you will. the absolute low of the week is going to be this low right there. But I mean, if you expand all week, this will be a nice entry point. So we're just price action traders. We trade inside of the weekly and daily ranges and monthly ranges. If you're a swing trader, you can do the same exact thing. We are coming up to the end of the month. We got 6 days left on this October candle, and then we will go into November, which typically November and December have very high volume, are very high volume months because it's the end of the year and you get portfolio adjustments going on, and that creates a whole lot of volume and trading opportunities, right? You got to have volume to have trading opportunities. Bitcoin's been absolutely sideways for 4 months. We would like to see it break out of this range. I mean, technically, last week you did break out of this. If we go into the daily time frame here, you can see this like right there, just tagged from there to there. You broke out of it a couple days ago. We were looking at this to be a pullback or a fresh week, if you will, and then we want to see it expand to the upside. Very, very tiny range today. Yesterday was an inside day as well. Sunday was the day that we got the breakout. Sunday was a very, very nice day. We also traded this on Sunday and we made money then. So there, so far on Bitcoin, 2 trades this week, and both of them were winners, both of them to the upside. We won't count Friday's trade because that was last week's trade. We did close out the week green last week, and if we quit trading as of right now, we will close out the week green this week as well. And that is all we try to do, is close out week after week after week after week after week green, baby. we like it. Just throwing a few things up here. That's just random stuff. We do have a lot of buyers. We do know that we had a lot of buyers on the S&P 500 that showed up on the dark pools. Let me see if I can pull that up for you real quick here. Excuse me. We'll open this up. So down here, you can see that we had a 1 order come in at 364.60 at $3.6 billion. Now that's a big bid. Big bids. You can see here that there wasn't very many bids compared to these two. Boom, boom. And both of them sitting roughly around 365, 364. So that translate to, if we pull this up over here, you'll see that that will translate roughly to around Friday's low. This is Friday's low. And I basically said yesterday that that's a very good spot to look to manage risk expectations. Price gets under this, you can expect a pretty decent downside move, considering that big ass bid position, depending on how wide the stop is, would likely cause a small squeeze. Now, we are looking for a short squeeze on Bitcoin and the S&P 500 because everybody is so bearish. There really isn't a reason to be bullish, to be honest with you. If you basically just take into account what is going on in the world economy, you have the yuan trading at levels it hasn't seen in so many years, and then the same thing goes for the USDJPY, trading at levels it hasn't seen in so many years. I mean, getting above the 7, getting above this stuff. We discussed this stuff last time when we came up into it. We were watching this level here, figuring that the Chinese government might decide to intervene there. They have not yet, but we do know that the Japanese, the BOJ, has in fact intervened. They have thrown $50 billion at this problem, basically selling the dollar. So 50 billion sell or ask on the DXY. That's why we've seen a nice little pullback on Friday. So now we will see, is there any more demand? Is there going to be more demand come back into the dollar, or will this mark the top for a potential trend change? And I'm not talking about forever. I'm just talking about for now. Like, I basically said that the USDJPY would be one of the best short trades if and only if the dollar was to see a bit of pullback or some weakness. you can see that this thing since the very beginning of 2022 has been in one direction, just straight up. This is due to dollar strength, naturally, as well as Japanese yen weakness. So we did take the short trade Friday morning. If you wanted to see the entry for that and the discussion on why, we nailed the exact top on that wick. We took profits on the move down. This candle is a 550 pip candle. It is the best Forex day trade I have ever taken in my life, outside of shorting Aussie yen during the 2020 pandemic. There was a daily candle on Aussie yen during the 2020 pandemic that also reached heights of 500 plus pips in a single daily range. This asset typically, when not really volatile, will trade anywhere between 30 and 60 pips in a day's time. So 500 pips, that's a freaking monster move, man. And we nailed that. We nailed the very top. If I go back over here, it will show you the actual entry there with the stop. So you can see that the stop is setting just under the entry. So if price does come back up and want to make fresh yearly highs, obviously I'll be stopped out. But I have already banked a lot of money based on it, right? Based on it. This is a small account there, but over here on the other, well, there's no point in pulling it up. It's the same entry across all accounts, right? Bitcoin on Friday was the same. It was based solely on DXY strength here, right? We were looking for the weekly open or the weekly high test. We shorted there. Boom. As soon as you took out that wick right there, that was our short entry on that. So we got 2 accounts open short, or 3 accounts open short on USDJPY, and we got multiple accounts open long on Bitcoin. So we're doing pretty good. Now, I said all that just to say this. Nobody knows what price is ever going to do. I think people, when they see, analysts on Twitter and YouTube post things, that they actually think that those people know what price is going to do. They don't. I don't. No analyst, no trader ever knows what price is going to do. With that being said, what is wrong for positioning yourself when you get rumors and when when you do all this thing? So like, basically, if Bitcoin rolls back over, breaks back down, and we go and make new, fresh 2022 bear market lows, yeah, those trades will be stopped out. But how many times have I already taken winning trades or winning profits from Friday to today? That is 3 positions on USDJPY short. All 3 accounts booked gains that day. 1 account on Bitcoin on the Bitget platform booked a long Friday, gains booked. That is positive P&L booked. It's done. It's over. Still have very small positions across all of the accounts with just potential trend continuation. So if it does happen that this was the low, not saying that I know it is, I'm just saying it potentially, then getting long here and then getting long here isn't a bad idea overall. I mean, that's my job. That's what my job is. My job is to seek alpha inside of the markets every single day. So I'm not a macro guy. I am a day trader. We look for day trading opportunities. And by doing this, by getting such tight and consistent, phenomenal entries, we are able to generate more alpha than you could if you just bought and held, right? Just buy and hold strategies. Not doing a whole lot in this. To be honest with you, day trading strategies haven't been performing very well either inside of this choppy slop garbage that Bitcoin's been doing for the last 4 months. But, we know that the bears have had ample, and I do mean ample, opportunities. I shorted the CPI prints. I switched my short side bias when the rumor happened, essentially. Once we got the rumor that there's a potential pause coming, that's all I need to basically give me a bias, a directional bias. They have had ample opportunities to push this down and make fresh bear market lows, and they have been unable to do so. Unable to do so. If I pull this up real quick, you're going to see basically when we were trading at $69,000 and $70,000, these are your Bitcoins that were being played around with. This side over here looked like this does now. So you can see basically this is like your volume profile only turned around. So instead of it being on the side, just flip it and put it on the bottom. Here's your price, 20K to 30K there. You can see that people are indeed accumulating at these prices from, 20,000 under all the way up to $30,000. People are accumulating. So when the market rolled over back in November, which we were all over it then too, that's what it looked like over here in the $50 to $70,000 range. You had big spikes up in this stuff. Now it's exactly flipped to the other side, which doesn't necessarily mean that we're going to see the lows and all of that. It just means that people are indeed starting to position themselves for a move to the upside, right? The TA analyst blocked me because he got bearish. That man has been bullish for the entirety of the bear market. Since it started, he has posts on his Twitter feed that shows big bull move coming from here, all the way down. Big bullish move, breakout coming, monstrosity of a bullish move coming. And then he decided to go this weekend and say that we got one more big down move coming. So someone that is that wrong consistently to switch their absolute strong bullish bias that they have maintained throughout the entire bear market, for them to go and switch their bias to bearish, we definitely want to be long, guys. We want to position ourselves long, right? Because they are always on the wrong side of the market. Always on the wrong side of the market. Consistently on the wrong side of the market, and they consistently and they have so many followers. So basically I said something that was very rude. I shouldn't have said it. So by rights, he had all the reasons to block me. But that's the first person that's ever blocked me on Twitter. I basically told him he was the worst analyst ever. I mean, yeah, anyways, moving on. We do have a fresh daily high on Bitcoin. That's nice. I'm going to go ahead and take profits a little bit right here. I'm going to have to get the uptick on it. So 19,375 spot 50 looks like a good spot. So if I do get this push up into that, it will take me out of the position by 70% of the position size. I will leave 30% of the position size on for any bullish continuation, because if we do get the breakout, I'm not saying that it's going to happen. I'm simply telling you that I am positioning myself for it. So just like I was shorting when I had a bearish bias, just like I was shorting the swing highs, shorting here, and then the last short was like over in here or somewhere like that. I can't exactly remember. That has now changed, and so far I've basically been long, and we'll see if this pans out, right? If it starts to trade away from weekly resistance, then, I have 3 positions here that could potentially end up making more money in the future, right? And I'll continue to trade up and down, and continue to stack Bitcoins. These lower prices is where I definitely want to be accumulating as much Bitcoin as possible, simply because I don't want to accumulate it at higher prices, right? Typically, you want to look for those bullish entries near the lows. And then for your shorts, for all you bears out there, I have no problem with you guys being bearish. Remember, that rumor is the only thing that switched my bias, and it switched it as soon as it happened, right? My bias is as long as you're trading under monthly support, which is $19,985, you have potential to see more downside. You broke down in September and you closed below support. That is typical for looking for continuation trades to the downside. And you can see how it almost caught the high of this month, October, right? Today's the 25th. So that now that you're back to the open close to the end of the month, that is just means that you've been sideways. You've just been sideways. There's really no expansion going on. We do know that on the last CPI print, we took out Q3's low, and that's where the bounce came from. So that, to me, is suggestive, right? On this move here, you liquidated Q3's low and then bounced. So in Saturday's video, I basically gave you, what levels to watch, what areas to watch, just from the bounce itself. If you fib that range, you can see that price traded right down to the 702 retracement and got a bounce. And for 4 days, 5 days now, has been slowly trending to the upside. So when you get this kind of stuff, you typically want to position yourself for the potential breakout. If you're a short, if you're a seller, you're going to be watching resistance. 2 days ago, Sunday, you closed above resistance. Yesterday was a pullback day. You pulled back down to the open of the breakout day or of the big bullish day, and then you traded off of it. And then this morning, so far, you've tested the weekly res and you're getting a very small bounce. Very small. You are trading as an inside day. An inside day for new traders is simple. It just means that you're trading inside of the previous day's range. And you can see since Sunday here, Monday and Tuesday both are trading inside of Sunday's high and low. So eventually, these will be targets for traders moving forward. That's where the liquidity is setting currently, right there and there. So any shorts that's short here have likely trailed their stops to there. Any longs that are long here have likely trailed their stops to here. Probably not that quickly as far as the longs go, because the long trade has only been going since CPI. CPI was lower. It was lower by 0.1%. Not the kind of lower that we want, but it was nevertheless, it was lower. Lower is better on CPI. That is what we want. Core inflation. The Fed has a 2% target. So as long as you're trending lower, I think you will see some buyers come back into the risk markets simply because they got to put that money back to work. Cash just isn't going to make money. Investors need to put those funds back into something. So if we can start getting the inflation rate to trend lower, right? 8.2, we want to see this thing get much lower. If it starts to make lower highs and lower lows, then I think you're going to see more and more higher prices on risk. I understand that the Fed doesn't want higher risk prices. They don't want higher asset prices right now. It's just because they're trying to combat inflation. I understand that. But the markets are going to decide what's what. They always do. They always do. So we'll position ourselves for now. We'll look, for very small ranges. Like I said, this can go on for another 5-6 months. So instead of trying to buy and hold, which you can buy and hold. You do want to buy around the lows. That's for sure. If you are just a buyer and you're wanting to start accumulating your funds into Bitcoin, you have places to manage that risk. You have obvious levels to maintain that risk. You got that low down there, 17,567. And now you have a fresh Q4 low. You can manage your long risk against that as well. So as price starts trending back to the downside and starts taking out these levels, then you'll know you're wrong. You'll lose, 1% 10% on the position, and then you'll look lower prices to reaccumulate. I don't believe that you will see $13,800, but if we do get down there, I will be a massive buyer down there for sure. Absolutely. $13,500 is a fantastic technical level to look to be a buyer. And we know that these technical levels work consistently over and over and over again. So yeah, that's going on. My favorite 2 days of the week, Tuesdays and Thursdays. Thanks to you for the live streams. Thank you, my friend, Mr. John. Thank you for being here. As long as you guys show up, I'll keep doing it. You know what I mean? I'll keep doing it. Unfortunately, no new positions to take. I know that sucks. It's very difficult for me to time that right because I never know if I'm even going to take a position, first and foremost. And secondly, it's like if the position happens or the trade happens at 6 o'clock in the morning, I can't just automatically go live then and hope we nail it. If you want to do it, I'll put a link to the Discord room. You can come in there. I throw out most every time I take a position anymore. Used to I didn't do it, but now basically anytime I'm looking for a trade, I post it in the relevant rooms. I also took a near-term short on Euro USD, so we'll pull that up and discuss that a little bit. You can see now that thing is absolutely screaming to the upside because the dollar is breaking down, which is fantastic. That's what we want. That's how we traded it Friday, and we were looking for continuation coming into this week. But the short I took this morning was over in here. Let me go get the daily open lined up over here, and I'll show you basically what I was doing. Basically, what I was doing is I was hedging my bet on the Bitcoin long. You know what I'm saying? It did, because this was positioned to see more downside. I have to go over to, and I keep forgetting that Forex.com is stingy with their data. So this is where the point of control was. So when we were trading up in this region up here around the open of the day, I took a short position here. And when we made a fresh daily low, which was here, I took profits and moved my stop to break even. So naturally, when this came back up, it stopped me out. But that's okay. It was just more or less a hedge. If this would have broken down, then the Bitcoin trade would have been stopped out, as the Euro USD trade would have went on to make continuation to the downside. But I had a really strong bias this morning coming into the market. Let me see here. I mean, not really strong. I really was concerned, is what I meant to say, about the long trade because everything else looked like it was going to go lower. But you can see now that price is above that point of control, how many people's getting stopped the F out. Big volume coming in down here around the lows. This changed. This wasn't like this morning. This was like, just from here down. It angled down and to the left of the screen. Now it's down and to the right. So a lot of people coming in there to be a buyer. And that's a nice move to the upside. So the short side trade for the very low of day tick was a beautiful, profitable trade. And the Bitcoin short, or the Bitcoin long, is still on and working out just fine. Nice little push there. You had kind of the same thing going on here with the point of control being up around the highs of the day. This changed once the 8 o'clock, once the banks come up. Once the banks come online at 8 a.m., there was a little bit of volatility to the upside here on the DXY. Right in through here, this little section here. 8 o'clock comes online, the banks come online, you get a little spike on the dollar, and then ultimately it rolls over. So the S&P 500 making a fresh high of day. The open act as resistance for the first part of the morning. If you would have gotten short there and been aiming at a low a day test, you would have made a very nice and profitable trade to the downside, even though you were technically on the wrong side of the trade, the wrong side of the market. That's why I trade this strategy. We look for targets inside of the day. And we're going to discuss that a little bit. But I had the Discord members, watching what to watch. One person in specific was looking for shorts. And basically I said, as long as I'm expecting this to be the low of the week, You don't want to be looking for shorts at the low of the week because it's the low of the week. You want to look for shorts at the highs, right? The highs. If you don't want to be a weekly trader, you want to be a day trader, you look for shorts around highs, daily highs. But there's you got to be right on direction. And we were pretty solid into thinking that, or hoping more or less, that this would end up being the low of the week, or at least under the weekly open, right? Because if the week turns green, if it gets up to here and closes green, we're going to be positioned near the low of the week. So that's what we were looking for. The first 2 days to be the downside fake move, and then hopefully, Sunday we close up above 19.8, 19.9. Just show us that you want to see, that the market wants to see higher prices. All that obviously will be changed if you can't get above the weekly open. For you sellers out there, that's going to be the first place to look for potential short entries, more or less next week, I would assume, because if you get up there within a day or two, that's going to be quite a bit of bullish momentum, and I don't know if I'd be wanting to short into that. But if you just look at this weekly, you can see that you're trading inside of an inside week right here. That is the CPI week. That is when you made a fresh quarter low, fourth quarter low, took out Q3's low and bounced. You closed last week bullish, up above resistance. So coming into this week, we were looking for a push lower down to weekly support. I got R there. It is support, not resistance. Bearish candles are support. Bullish candles are resistance. So there you go. Weekly support. We were looking right there. We were watching it yesterday, but like I said, it didn't show us what we wanted to see yesterday. So I didn't take the position yesterday. And also, a lot of times when you have a really big move, and Friday, the dollar did have a big expansion to the downside, the next day is usually a small range inside pullback day. And then the day after, you'll get another expansion. So it's like a 3-bar pattern or 3-bar formation. I've heard people call them. You know what I mean? There's your expansion. Here on this day is just your pullback day. You take out the low, boom, you go up. That's the fake out move there. Here is where you're looking to short on the move up. You find a resistance or a supply level, and you always try to get positioned for continuation. When you see something like this, this is an outside weekly reversal candle or a bearish engulfing at the top of the range. Where and how these things form tells us a lot. This was the BOJ essentially selling $50 billion, right? Big move to the downside. Then you have your small inside range day, although it wasn't an inside day because it took out the previous day's low, but nonetheless, it still had us looking to sell resistance. See that? 112.02. That's the level I was watching for potential shorts if indeed the dollar rolled over. You can see here, there's your daily res, right? Now, if you would have shorted it just on the resumption back under the level, you would have had to have your stop above the daily high. And if you did that, it worked out. You wouldn't have known if it was going to work out, but it did. It ended up holding at resistance and boom. So not only was Trade Talk community on the right side of the market today, so was everybody else that got short on the dollar. Everybody's bearish on the market. So everybody's bullish on the dollar right now. They're trying to buy pullbacks on the dollar. And I just think, at least for this week, that's the wrong direction. And so far, it's working out pretty damn good. SPX, we got SPX pulled up right here, my friend. You can't just say Heath SPX. You got to at least ask me a question. SPX is pulled up. We made a fresh daily low. We liquidated the daily low. This is the liquidation break strategy in a nutshell. You wait for the daily low or you wait for the daily high to be smoked, and then you just take the opposite position there. But it works better in a trending environment. And yes, since Friday, you have been trending higher. Weekly resistance. Here's the breakout above weekly resistance. There's the retest of weekly resistance. Look at the freaking monstrosity of a move that came off of that. Boom. So people were buying just under the low of day. It took 25, 30 minutes there to basically chew through all the orders once it got below the low of day. But as soon as it got done digesting, massive move to the upside. So you look for continuation off that. Boom. Pullback. There's a liquidation of the high. So you wait for the pullback. I was actually expecting a little bit deeper of a correction, but that's the daily low. There's nothing else under it. So if we go to the daily time frame, I'll explain. There is nothing else under it. So let's get rid of all this. So there's Monday's range, right? You either have the resistance, which is the close, and then the very next level is all the way down here. All right? So this daily range forms. It opens at 1800 hours, New York Eastern Standard Time, and then you just trade sideways, back and forth, up and down, liquidating buyers and sellers until ultimately you make the move. So we want 1800 right here. Alt V. So this is the day that we were trading right here. You can see here, here's your open, you run up, then you pull back to the open. This is the open. This white line, that's the open of today's range. Right there. You move higher, then you come in, test the open again, take out the low of day. No, that's the open. There's the low. Did it take it out? Yeah, it did. It took out the low of day. So on the open, you pushed lower and made a low of day. Then you traded higher, set in a high of day, traded down, took out the low of day, then traded up, took out the high of day, then traded down, took out the low of day again, then traded up, didn't quite take out the high of day there, traded back down to the open, boom, there's the liquidation of the high of day. Then the market rolls over, comes down, boom, smokes the low of day. Then you get a little bit of debauchery here. This was the difficult part to get through this morning, was all of this. But anyways, you take out the low of day again, and what happens? You take out the high of day again, right? That's what you guys need to understand. That's how the market works, right? It liquidates, liquidation, 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 just chewing through orders. And once there's that imbalance, it moves up or down. You'll have either the imbalance will push the market lower, looking for demand, or the imbalance will push the market higher, looking for supply. Does it every single day, all day long. This is the same pattern, plays out every single day. Every single day, this is what we're looking for. So if you took the liquidation break trade here, look what time it is, 6:20 in the morning, a.m. Eastern Standard Time. It's 2 hours before the New York session. And then, a long time before 9:30, which is the stock market open. There's two different opens that happen during the New York. 8 a.m. is where the banks come online and start trading the exchange rates and stuff like that. You get a lot of volume comes in then, and then 9:30 naturally at the stock market open, you get the last bit of volume for the daily range. If you'd have taken a liquidation break trade here, stop under there somewhere, you would have been safe. Beautiful stuff, man. Just constantly doing the same thing over and over and over and over and over again. So basically all it was doing, remember I said this is the next day. This is the next, or Monday's open. All right, so that's your next level of potential trade entry. If you drop down below this, then you would want to see price come down here. You wouldn't do anything from here to here. You either here or here, right? If you're looking for longs because you think you're going to see trend continuation, then you can wait for liquidations. The liquidations don't always happen neither. Everything works in trading, just not all the time. But if you're on the right side of the trend, the right side of the market, these typically are very good spots to look. The only reason that it stopped here is because this was the low of day. That was the lowest low of the day. So it traded down, liquidated it, came in, tested the open, not all the way, but close enough, back down to the low, and then boom, up. That's what we wanted to see. It worked out beautifully. And it's not bullish though, right? You're still in a bear market for sure. For sure. But you can still trade these pops for absolute 100%. One thing that I didn't like was it did act negatively when it liquidated the monthly high. This was October's high. So yesterday, Monday, we traded up, made a fresh monthly high. Okay, so also that's another thing that tells you basically what side of the trade you're looking for also, right? Like yesterday, we made a fresh monthly high. We know that there's only 6 days left in the month. So the monthly range is pretty much done, right? Dunzos. So if you just made a fresh monthly high, probably don't want to short it. Unless that happens at the very beginning of the month. But at the end of the month, that's a good signal that you're probably looking for long side continuation. I didn't like the bearish reaction that it got. And I basically was telling people that if we get under this, then I'll stop looking for longs until we get down into this region here and see if we can find support. But it worked out. And you're trading above that. Next level for potential resistance, 38.84. Unless there's like a weekly in there. Not really. I mean, you got some lows there and you got that open. Yeah, so this is going to be your next area to look for potential resistance. Unless it reverses naturally. If it reverses and gets back under the open, then you're going to be looking for this down here. And that was what we were looking for last week. Last week, right there was the entry. Right there. Boom. Look at that. Up. Back to test the weekly resistance. Up. Right? So we're looking to buy swing lows until the trend changes. If we start getting bearish again, like we print a bearish engulfing weekly next week, we will be looking to sell wherever this week closes and looking for downside, right? That simple. Lovely stuff here. Lovely stuff. But it's looking good. I think you're going to see a test at 38.83. Probably the end of this week or into next week. It could potentially happen today if this short squeeze takes off from here, and it could. Because people were probably more than likely selling this. This could also just be a fake out move as well, guys. Right? This stuff doesn't always play out to perfection, but it does quite often. Our trade is done. So now we're just watching to see how far it potentially goes. If it wants to close up strong, then I would say you're probably going to see a short squeeze. If you get a big nasty wick and then you get back under this stuff in here, then this is going to look more and more like just another liquidation run. And then we can look for more downside. But for now, we'll trade the ranges. The market's ranges. We're coming up to resistance on the daily. So definitely want to be looking to take profits into that. It's also weekly res. Nothing on the 3-day. 3-day demand ended up holding awesomely. Last week, I was telling everybody to watch 3-day demand for potential long opportunity. Wait on the close. That's a very low wick to the downside there. So naturally, that would have made everybody forget about the long, but then it closed back above it. So we liked it. We liked it to the upside. To the upside we went. Who is this genius? My name is Heath. Welcome to Trade Talk. Make sure you subscribe to the channel because we do this twice a week. And then occasionally on Saturdays, I upload just a quick 10-15 minute video discussing what I'm looking for. Good morning, Brandon, with Crypto Trades and Tech. Y'all can go over and give him a sub too as well. My favorite 2 day. Oh, read that. Good. Thank you, John. Again. Cash is making money kind of now. Well, yeah, you're always going to have CDs and stuff like that. And the higher the dollar goes, I mean, that's going to help purchasing power as well with the dollar. The yen's not doing so good and the yuan's not doing so good, but yeah, the dollar's okay, but it's not going to generate the kind of alpha that the markets can. That you can in the markets as long as you have a consistent strategy that produces gains. And you don't have to, it doesn't have to be a difficult strategy. So like a lot of people, a lot of new traders, if they did take the long trade today, they might randomly be targeting like 21,000 or 20,400 just as at random. You don't do that. You target the range you already have. That way you'll be more consistent in your entries and take profits. There's your range. So that's going to naturally be your bullish target from anywhere beyond this day. So here on this day, anywhere down in here, this would have been your profit target. If you got long down in here, this is your target. It's resistance. If you short this, that's your target. Right? If you get short at resistance, that's your target. You use the range you already have. Now, if you're a swing trader, then you're going to be using weekly candle ranges. You don't find a random range. Can it happen? Yeah, naturally. That's what we always want to see happen when we get into these positions is we want to see price just go straight there in 5 minutes, please. So that way I can book my profits. But typically what retail will do is they'll be like, once it gets their target, they'll be like, oh, I'm just going to leave it on because it could go up here. And they talk themselves right out of a winning trade. Use the candles. Use the candles. High, lows, open, closes. That's all you need. That's all they used in the 70s on the floor. That's all you need now. If it ain't broke, don't fix it. You don't need cup and handles and all those things that don't work. Just need candlesticks. That's it. And a trending indicator or two. Like the 21 exponential. It's a fantastic little indicator to show you when a trend is potentially starting. But naturally in a choppy range-bound environment, which we have been in 4 months, this indicator will get you wrecked. It is a trending indicator. It works best in a trend, not in a sideways environment like this. But if a trend ever does start, that's your directional bias, right? The 21's trading under daily closes. You're looking for longs into support. If it's trending above price, you're looking for sells into resistance. And eventually you'll be wrong because the market will ultimately reverse and look for liquidity. So we took out Q3's low. That means the next area of liquidity to the downside is all the way down here. So will the market go and search for the liquidity all the way down here when there's plenty of areas to search for liquidity to the upside? All right? Plenty of areas to look for liquidity. That probably would be my, like if I was having to bet on, if I look where price is currently, I would bet that this would likely be the target. Now, I'm not going to take a trade and target that because there's too many areas of resistance to get through before that. Like this area first, you got to get through that before you can ever even think about this. Then this, right? Not a lot as far as dailies go to stop you from getting to $20,300 if we close another daily above 19,577, for instance. Like if we close above this, There's really nothing in the way of stopping you to get to there outside of this one wick. This one wick here. So if this becomes a sell side event or a selling opportunity, you'll be watching this price for potential shorts, depending on how today closes. Today closes under this, then it's going to look like, yeah, the buyers are not that aggressive yet. We need aggressive buying to basically start and maintain an uptrend. You got to have lots and lots of demand. And I just don't think you're going to get that off of a rumor of a slowdown, right? It's just a slowdown. It's not as big as the rumor was last year. The rumor last year was the Fed was going to do a 180-degree turn on their monetary policy. So they were extremely dovish, and then they were going from extremely dovish to extremely hawkish in one fell swoop. That's the difference. This rumor is just, it's not a, I'm not looking at it as a pause or as the Fed pivot that everyone's looking for. No. This just means that if they go on with that rumor, they're not as hawkish as they were last month. That's it. That's all it means. It doesn't mean they're dovish. When a Fed goes from hawkish to dovish, that's a pivot that the markets will absolutely become bullish on. But that's not happening anytime soon. You still have 8.2% inflation. That has to start trending much lower for the Fed will even ever start talking about, let's lower interest rates. That's what you need in order to sustain a bull market rally, probably. So in the meantime, we'll just consistently take profits out of the markets, left and right, front and center. Good morning, everybody. Good mornings. Good mornings. Can you look at Glassnode? What would you like me to look at on Glassnode, my friend? I have it right here. Over here, we got all kinds of stuff we can look at. You just got to let me know what you want me to look at. The open interest put the call ratio wasn't doing much. So we kind of had that, that kind of helped us with a bullish bias. Put the call ratio, just this orange line plots basically when the puts and call open interest changes. So when this is trending up, it means people have more interest in puts than they do calls. And pair that with just the open interest altogether. If you have a rising open interest with a rising put to call ratio, doesn't always call the top of the market or, a turning point in the market, but it can. Open interest is still very high, but this is normal. Remember, the more people that start trading this way, buying spot Bitcoin and using the futures products to, generate alpha while their spot position is declining, like me, you know what I mean? Like I've been doing this since the bear market started in November. I trade Bitcoin, inverse swap contracts. So I'm not taking multiple trades in and out with Bitcoin. So that way, if I make money, I get paid in Bitcoin. If I lose money, I lose Bitcoin. This is just a way for me to generate more Bitcoin, to own more Bitcoin, while the Bitcoin price on a long term, like what macro investors are looking for, isn't really doing anything, right? Like Darius Dale, he's a macro guy. He started getting short back in November, October, same time I did. And he's just riding those short positions. He's not a day trader. He doesn't believe in day-to-day alpha generation. But it is possible because I consistently show you guys all the time. So it's just not his forte, if you will. Like his forte isn't my forte. He knows a lot more about that stuff than I could ever even dream of. But he's still bearish, very, very bearish. There's really nothing going on. He believes that there could be a short squeeze, but he's not looking for that to generate much, in the way of consistent gains on a quarter-to-quarter basis, right? But since we did liquidate Q3's low and price is trading away from that area, we can infer that there's a slight possibility that it's trading towards Q3's open. And once it gets or Q4's open, excuse me. Once it gets to Q4's open, there's going to be resistance there. We need to let price trade around it for a little while and see if does it want to show us the ability to trade up away from the open. If it does, then we can target Q4's high. Boom, boom, boom. Just like that. So you can use this strategy to be a macro guy. Absolutely. 100%. We're already green on the quarter. So Q3's high is not very high, unfortunately. It just opened this month. This just started Q4. So this is October's range. After November closes, then you'll see where Q3 stands. Are you making higher highs consistently in the quarter? Because if you are, pretty good chance you want to look for longs. Target Q3's high. Because Q4 high is right there. Very close. But remember, it's just October's range. There's where your liquidity resides. You liquidated Q3's low. That's the next place. You're above the open. That could be why you've seen a lot of sideways choppiness for the last 5 days. Because people are shorting Q4's open. Resistance. You're at Q4's open right now. Right now, today, this very second. You are finding resistance at Q4's open. And make no mistake, ladies and gentlemen, Bitcoin could absolutely roll over back to the bear side from here. Yes, it could. I would rather, if I thought that, like if that was my overall thesis, I was still bearish, I would be looking for shorts roughly around 19,571. In there, or abouts. More so than this area, because a daily can trade through a quarterly level multiple times, like you see here. That would be like looking at a 5-minute candle on a daily resistance. You know what I'm saying? So same scenario. Daily on a quarter is, yeah, it's a small time frame in the overall scheme of things. You are correct. Than you. Oh, thank you, probably. You're welcome. I am Heath's secret to the market. I meow, he buys. Pepe the cat. Thank you for being here. For anybody that doesn't understand that meme, Pepe is my cat's name. And we actually have a picture of him. That is him right there. That's him. That's actually him. He's a black and white cat. Phenomenal. That's why his name is Pepe. After Le Pew. Yeah, just give me a level on that, and I will look for it. You the man. Thank you very much for that, Cassidy. Good morning, Bradley. How do you know it's a liquidation rejection versus a break? See, therein lies the problem, right? J.R. Rich, that's a great question. I'm glad you asked me. Beautiful. Okay, so my recommendation, because it's literally a strategy I develop myself. It's what I trade, right? It's best to use that strategy on high risk news events, okay? Because if you're not on a high risk news event, there's a good chance that you're going to be trying to short the daily high on a bullish day, right? So like if you're trying to short the intraday high on a bullish day, you're going to get continuation. So you're going to make fresh daily high after fresh daily high after fresh daily high, right? So every single time you're going to try to reshort. No, it's best to use the strategy on a high risk news event, and you only want to implement it as long as the daily high and low is still intact. Now, during CPI over here, that wasn't the case. On this CPI, that was not the case, right? We had already liquidated the day's high, and we made a fresh daily high, and then we liquidated that before the news print came out. But since we were making fresh high after fresh high, it was an easy trade. You just sell the high and put a stop above it. If you get stopped out, then you're done for the day. You don't try to force your will on the market, right? We're only risking 1% to 2% on each individual trade, no more. So yeah, you would simply get stopped out, then you know you're wrong. And then you don't go back and re-short it again, expecting it to be a liquidation break day, because you have continuation. Once that occurs, once you liquidate the high and then you continue, you have a bullish breakout on your hands, not a liquidation break trade. So we were looking for the liquidation break to the downside because the last 3 candles were bullish. Yesterday was the only bearish candle that we've had since the liquidation of, since this, right? I can't remember. What was this? This was Friday. Since Friday, we had this big move to the downside and then a pullback, closed strong. That's when the news happened. So every subsequent day after that had been bullish except for yesterday. But we know that the first part of the week is usually the fake out move. So it's good to see a bearish Monday if you want to see a bullish week. If you think the weekly is going to be bullish, the weekly close will be bullish, you typically want to see a bearish Monday and even a bearish Tuesday. All right? Because you're expecting that or somewhere in that area to be the low of the week. And the same goes for the upside. If you open strong, or not strong, but if you open like bullish on Monday and then you're still bullish again on Tuesday, then you can have that in the back of your head that there's a pretty good chance that this market might be getting ready to reverse, looking for a bearish week. All right. It doesn't happen all the time, though. That's the part where your risk management will come into play. I don't take trade after trade after trade every single day. I look for the highest probable entry once. Like yesterday, I didn't even take a position on Bitcoin because it wasn't showing me what I wanted to see. This morning, I knew that, yes, awesome. We're red yesterday, we're red today, we're very small range. So that means, the bears can't really get anything going. I'm looking to get long at weekly support or at the daily low. It just so happened that today, that coincidentally almost perfect with one another. So not only getting long at weekly support was a good idea just because it's weekly support, but also it made a fresh daily low on the same 5-minute period. So you went down, made a fresh daily low, meaning you liquidated the previous day or the previous low of day, and also you've done that at weekly support. Boom, boom. That's 2 checks for you to say, yeah, I think I want to take this trade to the upside. Even if I'm wrong, even if I get stopped out, this is a high probable scenario, high probable place, high probable time, high probable trade. That's what this channel is built to do. Teach you to look for the trades at the most high probabilistic time during the day at the most high probabilistic area during the day, right? That's what we do each day. We let the market decide those levels for us, and then we take our trades based on those levels. So yeah, when you get stopped out, you're done for the day. You wait for the next day. You don't try to force that issue. But it's really best, like NFP, non-farm, stuff like that, CPI, stuff like that. Because a lot of times you'll get that liquidation, boom, and then the market will instantly reverse. Like on the last CPI, we made a fresh daily high. I got short, and then within 4 minutes, it went down and made a fresh daily low. Bam, boom, done. Trade, complete success. Then you just move your stop to break even. And you leave a small portion of that position open, because if you are lucky enough to get in a place where you get continuation, you will be positioned perfectly for it. And you are using zero risk of your capital to do so. You are risking unrealized P&L, so there is still risk on the trade, but it's only unrealized P&L. It's not your money. Your money is the money that you need to keep and protect. When you enter a position with this strategy, you will enter the position, the trade goes in your direction, you will take profits, then move your stop better than break even. That automatically pays yourself for taking the risk and takes all of your risk out of the market. So now you're just betting on continuation with the bank's money, with the exchange's money. And if you lose that, oh well, you still got paid on the trade, right? That's just the way that made me consistently profitable. That's how I had to keep doing things, different things, trying to just squeak out an edge. All you need is one little edge in the marketplace to squeak out returns. And that's all I do consistently. Not looking for big monstrosity moves, but when they happen, I love it. I made a lot of money Friday on Bitcoin and on USDJPY. Lots of it. I doubled my FX account on one trade. That's insane. I've never done that before. Ever. I'm usually looking for, a 10 pip stop. Well, you couldn't have done that on the USDJPY that day because it was trading so fast, like so big. Just one 5-minute candle was making 100 pip moves. You got a 100 pip move today on it, right? Here, let's pull up Oando over here. So it didn't do anything at all day long. There's my internet taking a shit again. Here we go. Didn't do anything all day long. Right in here. Just sideways, 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 sideways. Look at this 5-minute candle there. One 5-minute candle. That one's only 25 pips. Maybe it was yesterday. I looked at one 5-minute candle earlier before the live stream and it was almost 100 pips. Oh, it was this one. It was this day. Yeah, I mean, that's really unheard of in this asset. Look at that. 105 pips in a 5-minute period. That is crazy. There's a lot of volatility in this asset right now. I mean, it's the second most liquid currency pair anyways. Second to Euro USD. Euro USD has the most liquidity in it than any other trading asset as far as I'm aware. Forex asset. It has the most liquidity. And then USDJPY is number 2. So that's a 550 pip day. That's a 500 pip day. And then there was a couple, over 100 pip moves in through this. That's your BOJ intervention. Boom, 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 boom. And it takes a little while for it to take place, right? They hit it with like 3 or 4 times and then blow off. It's like a Wyckoff distribution formation, something like this, right? You make a high, then another high. So each time you sell the high, 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 and then finally it works after stopping out many, many people for many, many days. But then ultimately it works. We were looking for something like this to take place over in here. So I did take a couple trades on this and lose. I'm not perfect, right? I lost a trade over here, and then I lost another trade on this breakout here. I was looking for a liquidation break upon this wick. That's a box. Never mind. I need a line. There. So on this day here, I got stopped out. I took a short when we liquidated this swing high, and then, an hour later, boom, stopped me out. So I took up multiple shorts on this and lost. But each time I lost, I only lost 1%. On this trade here, I doubled my account. So more than made up for those couple losses I took trying to nail the top. But you don't want to do that at the beginning of a bullish trend and stuff, because you're retail trying to pick a top. And retail is very often wrong on their top picking. This was the right time. We knew the BOJ was going to intervene. They came out and said it. That's when I started looking for shorts. Because if they're going to be sellers of the dollar, there's not many people that has more money than the BOJ. I mean, they do what our central bank does, right? It prints fake money out of the middle of nowhere. It just makes its own money. So until you have that power, you're not going to be able to change the market's direction. But a central bank definitely can. And oftentimes does, even if the central bank doesn't directly intervene. All they got to do is say something. The BOJ right now isn't going to rate or do any interest rate hikes because it'll destroy their economy. They still have, on the lower end of inflation. So what they're trying to do now, if this doesn't work, then you're going to see something happen in the USDJPY that's never been seen before in the Forex market. And it could end up turning out to be something like when the Swiss franc lost the peg or dropped the peg. Something nasty like that. If they can't get in control of it, and something's got to happen, it's going to break one way or the other. And I assumed it was going to be to the downside, and I'm hoping it continues. If it continues and goes up, stops me out, I will be wrong. Let's go look at a couple other markets, and then I'll answer some more questions. I just want to get an idea of what's going on in the stock industry here. We got Mara's up 6%, which is, a minor, or not a minor. I don't know what they do. They do something with Bitcoin. So Bitcoin's up. It's naturally they're up. They just mine, I think. I think they become miners. They changed what they used to do. I know that. I traded Mara when it was different. Roku's up 6% on the day. This is an asset I want to add to my holdings, not trade, just add to the holdings. Buy a few shares of this. I did buy a few shares of it yesterday. I'm going to buy a few more. I just think it's going to go up. They are a decent company. If you look at their earnings reports for like ever, they do pretty damn good at making money. My problem and my biggest concern with Roku as an investment is now most of your smart TVs come pre-built with this Roku device. It's already built into the TV. So that can help Roku sales as long as the TVs are buying it from them. But if they decide to make their own, like Amazon Fire Stick, Roku, there's multiple companies that do what this company does. So they need to figure out a new way to monetize something. But I do believe that they will figure it out and it'll be a good investment. This thing got beat up, but they're up pretty good today. The tech sector, not really doing anything, but the energy sector is doing something. And I don't know where all these gains are coming from for XLE because oil's down. Nat gas is down. Maybe. No, AEP is down. I don't know why energy sector is up. There has to be one or two stocks that's absolutely killing it right now, causing this to be up at the highs like that. Because like I said, oil is down. Nat gas is way down. I know there's other things that make the sector move. I just don't know which stock it is. There's probably one or two stocks that's causing that on XLE. Google not really doing a whole lot today. AMD's another company I like for long-term holds. AMD is a chip manufacturer and they make good ones. Nvidia, AMD, Intel, all three, the big three, probably get them on the portfolio. I don't know about right yet. Like I said, if the bear market isn't over, a lot of these tech plays are going to get killed a little bit more. I guess one could just simply look at ARK, as that would take care of your technological needs for investment. It got absolutely lighted up. Kathy Wood looked like a genius throughout the entirety of the bull market of 2021, and she got absolutely wrecked. There's 77% off the all-time high. So, yeah, probably wouldn't be a bad idea to go ahead and start buying a share or two of this. If you buy it in small increments, like 1 share here, 2 shares there, 5 shares here, you know what I'm saying? Then it won't be so bad and you might be able to get it closer to the lows. But I do believe that, once the bear market is over, look at the pandemic. Look how little the pandemic's move is in comparison to this. Oh my God. Oh my God. That's quantitative easing, folks. Quantitative easing right there. Insane stuff. O'Reilly's another good company I like. They only go up. A stock price only goes up. You're at all-time highs on O'Reilly. Boom. Naturally, you want to wait for a pullback. You don't want to buy it at the highs. And this is an expensive one here. So getting it about 30 or 40, 50% off would be good. The more that it climbs or the more expensive it gets, they'll probably end up splitting it. The last time they did a split was like 05 or 06. I can't remember. Right there was one. 05, June of 05, they did a split. Yeah, it only goes up. We looked at other auto parts, advanced auto parts, doing good. So naturally, there's a lot of money going into these things. AZO, doing good. All-time highs. That's AutoZone. So the car auto parts sector is making money. Yeah, it's a pretty safe bet, right? All right. Nice. Oh, the TV just picked up, has Roku. Yeah. Yeah, I love it. I have a Fire Stick. I don't have cable because I don't need it. I got YouTube for my cable, and then I got all the streaming services. Netflix, Amazon, HBO Max, you name it, I got a D+, all of it. So I don't need cable. So I don't even have it. Oh, for your information, the guy that was asking, that guy was asking who is the genius that blocked you. It wasn't directed at you. Gotcha. All right. It don't matter to me anyway. I won't be a bear anymore. I'm not saying that. I'm just trying to position myself to catch the move higher. I don't know that the market's going to move higher. I'm just trying to position myself for it, at the lows, just in case. And I am quick to take profits. So if I'm wrong, I'm still making money. Like if it comes down and stops me out, it's okay. The only thing I lost was unrealized P&L. I had already got paid for the original entry. So, yeah. And if it does break down, we'll be shorting it. We'll be looking to sell swing highs. We'll be looking for weekly highs and daily highs to be resistance if it continues this trend. But I mean, down in here, it really should have broke down. Here, when you came up here, liquidated this, then you started to go lower, like this should have broken down. But to be honest, the bulls haven't been able to get much going either. I mean, it's making lower highs and lower lows, guys. It is what it is. This is a lower low. It took out Q3's low. So you are wedging up. There's no doubt about it. No doubt about it. And I'm not buying it based on a breakout of a technical pattern either. I'm not a pattern trader. But I mean, there is a technical breakout there. The problem is on log, it isn't a breakout yet. Trend lines are so subjective like that. Off log, you've broken out. On log, you haven't. And the same goes for the main trend line from the all-time highs. All right? On log, you're close to breaking out. Off log, you're not even freaking close. We won't get it perfect, but we'll just do it like this. All right? On log, not even close. Off log, oh, you broke out. No, I'm not buying it for that. I'm buying it simply because, yeah, it's just sideways. The bears have had every opportunity to push this thing lower. But it probably will come sooner or later if the bulls can't get it going here. Because if anything that I've learned in doing this is when you're sideways like this and can't get shit going, yeah, usually you look for the breakdown. And the breakdown is probably more probable just because of the overall trend and the overall environment. But we'll see what happens here. Right? If you want to, like, the best way to do it is just wait for a weekly support break. Like a close below this would have us looking for bearish entries, right? A weekly close back under that would probably have us targeting at the very least 18,774, which is not very far away from this. I mean, you've done literally nothing in the past 5-6 weeks. So you can still be a bear, but just don't be a bear at the lows, right? Today, you would potentially have been trying to short the low of the week. You don't want to do that. You want to short, like, the open of the week would have produced some consistent return, or a return, if you would have just said, okay, it's 8 p.m. on a Sunday, I'm going short, because it did ultimately go lower, right? Let's find it. Sunday, right there. Alt V. All right, so Sunday at 8 p.m. Eastern Standard Time was right here. Right here. If you would have been like, I'm going to watch resistance. If this candle turns red, I'm selling it. So at the open at 8 o'clock Eastern, you had a little spike up into resistance. As soon as this bitch turned red again, you could have threw a stop over that, and you would have been good. All the way until, well, you're still good. All right. Wait a minute. That's not right. There's the open. I thought Bitcoin was green on the week for a brief moment. No, not yet. That's right. Not yet. Yeah. And that was right at weekly res. So watch for this price down here. You get a weekly close under 19,264, then you can look to sell resistance, any retest of resistance. So like, for instance, this candle comes back down, closes down here. You'll be watching this area for potential short entries, or this area for potential short entries. That's just the way the market works. So if you come down, break down, close, you'll be looking for a retest of that to get short, or a retest of this to get short on a weekly basis. It might not even get up that high. It's just one of those things. So this candle was the breakdown. This was the first candle that closed like below the support. There's a support over here. You can see this was the first one to break down. And this was also when volatility is on the lows, like from weekly, daily, 4-hour, 8-hour, all the way down to hourly. Your volatility is on the lows. This was the first candle that broke down. So I basically said, you know, when this happened and we took out the high, we were looking for longs because we were expecting this to go from there. But then we had this, which now we know was just a run down to smoke Q3's low. And now we're starting to get a little bit of, not much, but a little bit of movement to the upside. So yeah, naturally, I'd like to see this thing rip. I'd like to see a weekly candle from here go all the way up to there. I don't expect it or look for it, but I would like to see it. NASDAQ, let's go look at it. We know NASDAQ made a new bear market low. Yeah, they're bullish on the week and pushing. I wonder if this low is from today. Probably not. Nah, it was trading up in here yesterday. There was your low on the week. Up. It's in the resistance. See this stuff over here, similar to the S&P 500. It's at about the same place, October's high. Whereas the S&P 500 made a fresh October high already. NASDAQ is lagging. But there's your October high. It does look like it's stretching for it, but you are in a daily res. Does it have to hit October's high? It doesn't. But if the S&P 500 continues tracking above the monthly high, then you're going to expect this to follow up. And then you'll probably be looking for resistance closer to 11,950 or 12,000 bucks. 12,000 is a big figure number. You can see how it acted as support here. The wick pushed down a little bit below 12 grand, but that close is $12,011. So $12,000 acted as support here. You got a nice bounce. So look for $12,000 to be the next resistance if you get a breakout above October's high and a continuation push. Yeah, it looks like I've answered every question. Bitcoin's market cap will be extremely small if hitting 14K. It's hard to see it staying down there too long. Yeah, absolutely. Absolutely. I agree. Its market cap is so small, but remember, it was $2 trillion during the bull market. That's insane. I remember people were acting like it was going to go to $7 trillion in market cap because that's where gold's market cap is. And you had already had a, 4,000% return on the year, and they were expecting another 18,000% returns. Oh, we're going to be beating gold's market cap by this time next year. No, not hardly, not close, not even. But yeah, if the market cap, the cheaper Bitcoin is, the better it looks to investors for sure. Absolutely. I like it cheap. Because during bull markets, whenever the next one we will get another bull market. This is not going to be the end of the world as we know it, like everybody assumes it is. It's not. They'll fix it, and we'll have a bull market. I definitely want to be in Bitcoin as cheap as possible before that happens. We will have a bull market. Bear markets typically last, a couple years at best. 08, what was that? Oh, that's the 2000. So on the NASDAQ, the 2000 bear market was much more worse than the 08 bear market. It lasted longer. So your all-time high was in 2000, and you found a bottom in 02. So 2 years, bear market. Then you were sideways for a long time. Yeah. Bear markets only last for a few years, and then the bull market comes back, and you want to be a buyer then. You don't get very big bear markets either, but once every decade or so, like big bear markets like this one, right? So this, in my opinion, is one of the best opportunities you're going to see for the next 10 years, potentially, for Bitcoin and all risk. But with the caveat that it can go much lower, right? It can. But yeah, it's definitely looking good. Is there, Heath, is there any alpha looking at Bitcoin Euro on a weekly? I don't trade it because I don't own any euros. But yeah, I mean, you can generate just as much alpha looking at BTC Euro as you can BTC dollar, right? Bitcoin on the Euro chart, though, hasn't even broken down below support yet. So, I mean, just buying 19,035 has been a decent trade. I mean, if you bought it there, that was a nice trade. You haven't gotten back down there, but that's monthly support. What did you ask for exactly? Getting ready to overtake the 10-year yields. Oh, wait, sorry. I'm still on the other one. On a weekly. Gotcha. So you got monthly support here. Currently, you're trading under weekly support. So, yeah, I mean, the chart doesn't look the same. It's close, but not the same. Whereas this support level right there was a good spot to be a buyer versus the dollar. It wasn't. And the euro looks a little bit different. The euro actually, Bitcoin versus the euro looks a little more droopy. because the euro is strengthening right now. When the dollar gets weak, the euro will strengthen. Just out of inherency, because the dollar is made up of like 60% euro, right? So that's why the euro and dollar trade inversely. So as long as the dollar is weakening, then the euro is going to strengthen, and that could affect euro Bitcoin prices trading against the euro, because you're going to be trying to buy Bitcoin versus the euro when you're having a strengthening euro. Now, with that being said, I do not believe that the euro will be strengthening for very long. I just think you're getting a little pop based off of that news that we got Friday. I do believe the overall trend will more than likely come back into shape. The higher it goes, the more sellers will show up, is what I mean. But you do have a weekly support that you can watch for potential long entries at 19,371.69. That's weekly support. You haven't closed the weekly candle under it since September the 12th. So any retest of this area could potentially be a place to buy. Other than that, I don't really see anything. It looks like you're finding a little bit of support at this big bullish candles open. It's typically not where I want to look for support. But nevertheless, it ended up holding a little bit. So you can see you're not getting near the move that you are on the dollar, or on Bitcoin versus the dollar. Right? That's because the dollar is dropping pretty good, and the euro is strengthening. You're even losing your trend line here. So that short on the dollar was a phenomenal call. Just absolutely freaking beautiful. I love it. And look at this. USDJPY is down 0.62%. That's nice, considering it yesterday it was up 1%. They're giving back some of them gains. Yeah, baby. I just want to see this thing roll over and keep going for the rest of the year. And then, what are your thoughts about the 3-month yields getting ready to overtake the 10-year yield? It did, didn't it? Didn't it overtake it? I think I have to look at that on the Fred chart. If you got a ticker, let me see here. I don't know, man. I don't know how to pull up monthly yields. Yeah. Let me see here. Let's just Google it. 3-month, 10-year inversion. Google probably knows what I mean. Yeah, here, we'll pull it up on the Fred chart. I mean, I don't know what's the difference between, the 3-month is a little quicker, I guess, as far as reactive, but yeah, you inverted briefly there for a second. You got under the line, right? And that happened on Friday, the same day. Nope, that was Tuesday. Never mind. I thought it happened on the same day that JPY broke down, or got a bid, but never mind, it didn't. It happened on Tuesday. So yeah, it does look like it's going to invert. The 2-year and 10-year has been, that's like the real one that everybody uses. Here, I can just pull that up as an indicator. Oh, here, let me do it this way. As an indicator, I have that. Right here. As an indicator. Can't hardly see the damn thing. Let me fix that. Just bear with me. Boom. Now you can see it. So the zero line is your 10-year, 2-year inversion. You inverted here, then you inverted again here, and you're still inverted. All right. Let's go to the weekly. Yeah, you inverted like that. Like, this first inversion came in 05, and it stayed inverted with a quick rebalance there. But then it went right back to inverted all the way till 08, 07. So that's 2 years right there. So we just got here. So are we looking until 2024 before this comes back out? I don't know. This does call a recession, I understand. But I don't understand why the 3-month and 10-year would be any different. I mean, it's been down here for a while. Yeah, I don't have any thoughts on it. I know, I mean, yeah, I mean, I think the economy's already in a recession. Nobody else will say that. I don't know why. We used to just use 2 consecutive quarters of negative GDP means recession. Like that used to be the definition, the very definition of a recession. When you had GDP, 2 negative quarters of GDP. And we had that. Negative 1.6 for the third quarter. Here you go, right here. Q1, Q2, Q3. No, we don't have Q3's numbers yet. It's just third quarter. Or third. I don't even know what that means. Here's Q1 2022, Q2. This line, the zero line, anything under that is considered negative. Yet, I mean, you did see growth, but that's negative. We are in a recession by this chart right here. Recession, baby. The Biden administration changed that. So now nobody's using the word recession because the Biden administration says we're not in a recession, but I promise you $100 against one nickel that if the Republicans were in office, the Democrats would be screaming off the top of their lungs about how we're in a freaking recession. And it's because of the Republicans that were there. But nope, since the Democrats are in office, we can't use the same definition of a recession anymore. So figure that out. I don't know. But I think you're already in a recession. And you will be as long as you're in a bear market. You're in a bear market. You've been in a bear market since November. That's a recession. You got negative GDP growth. You got negative growth, period. No growth happening on stocks. It's a recession. So I don't really have a take on the 3-month yields versus the 10-year, but it does look like it's about to invert. How do you tell Bitcoin is cheap? Well, there's a few different ways you can do it. There's an indicator that you can use. It's just you have to decide what is cheap for you. The way that I do it is I use the Bitcoin on the weekly, and I use the RSI, right? The RSI. Anything under this is oversold. Oversold is cheap. If it's oversold, it means it's cheap. It's cheaper. So it's up to the individual where they find value. So I can't tell you what a cheap Bitcoin is. I can tell you what my parameters are for seeing what a cheap Bitcoin is. And oversold Bitcoin on the weekly is cheap Bitcoin. And if you don't like that metric, I use this. It's a T2 metric on the Glassnode Studio. It's called the MVRVZ score. The green line down here is undervalued. The red line up here is overvalued. And this orange line, that is the oscillator, right? Whenever the orange line is in the red, that is considered overvalued. So you do not want to be a buyer up there, like for a long-term hold, right? For a long-term hold. Can you make profitable day trades while you're in the red? Of course you can. But I'm talking about as far as like a buy and hold strategy, like for multiple years. You do not want to be a buyer of Bitcoin for a long-term strategy when you are overvalued. You want to be a buyer of Bitcoin when you're undervalued. And you are undervalued, my friend. You have been undervalued since June 2022. Now, is that a buy signal? No. I'm just answering a question, right? It's cheap. So right now, I am trading as hard and fast as I can to make as many Bitcoin as I can without using my money to buy them. I'm just trading with Bitcoin, with the Bitcoin I already own. I'm using that on the inverse swap contract. If your platform doesn't have an inverse swap contract, then after this video is done, I'll post a link where you can get one that does. And you just trade Bitcoin with Bitcoin. And if you're a good trader, you're going to be able to accumulate more and more and more Bitcoin. And after I achieve a significant amount, I just take what Bitcoins I have made and I ship them straight to cold storage. The other day I have a cold storage wallet being a Trezor already, but I bought the Ledger Nano X, or is it a Nano S? What is it? Here's the box right here. Ledger Nano X. So as of now, all the money that I've made on Bitcoin or on Bitget platform is on this ledger or on this wallet. So I already have like my HODL account, cold storage. I have some Bitcoin on Coinbase's exchange, but it's not the majority of my Bitcoin. The majority of my Bitcoin is in cold storage, right? So it's just a way for me to track the funds. That's why I got a new wallet, because I have been doing so good on the Bitget platform. I just made a big withdrawal the other day. I only want to keep about 10 grand on exchange, because with 10 grand, I mean, that platform gives you all the way up to 125x leverage. If you can't make a couple $1,000s with 10 grand each day, then you're doing something wrong. But I mean, consistently, I don't have a target of a couple $1,000. I'm just trying to say that you don't need much more than 10 grand on exchange to make quite a lot of money. Quite a lot of money with leverage, but leverage can hurt you just as bad as it can help you. I suggest having a trading strategy that is and shows you consistent profitable results before you start doing it. But if you are a consistently profitable trader and you don't do what I'm doing, you should. I use Forex and stocks and options to make my cash, like my US dollars, to pay the bills, right? With trading Bitcoin, I'm mostly trading Bitcoin. I do have the ability now to trade with Tether and USDC, so I have been, playing around with that. But most of the time, it's just a little bit of money just to do a trade example or something on those two. Whereas the coin M, the future swapped contracts, the inverse swap contracts, that's my main account. So I got, put about 10 grand in Bitcoin in that, and then I trade that. And then whenever it doubles or triples, because, sometimes it will, if you know a really nice trade, then I just take 0.5, or I take all the Bitcoin, but like 0.4 or 0.5, and I leave that in there. Does that make sense? And then I trade with that. Boom, boom, boom. And then when it gets sufficient and again, I do it. Just withdraw it straight to cold storage. I'm just trying to accumulate as much of it as I can without actually buying it. But if you can't do that, then buying it is also something you can do. I strongly suggest that people do start buying at least some down here. This is and has been, for the entire history of Bitcoin, a good place to be a buyer. I mean, you can see it. Here, though, yeah, you did drop under it. So it's not a guaranteed fact that you're going to go straight up to the moon again, but it has been historically a straight up fact. I think the more and more Bitcoin is owned, naturally, the less you're going to get these big, nasty spikes, right? It'll get harder and harder the more participants that come into Bitcoin. The order book will get thicker and thicker and thicker. So the next one might not even reach under or overvalued. But yeah, I mean, there's two different ways right there for you to consider Bitcoin's cheap or expensive. Right now, it's cheap, much cheaper than it was, right? Still not as cheap as it was back in 2017, but I don't think you're ever going to see those levels again. $3,000-$4,000 Bitcoin. I don't think you'll ever see that again. Simply because over 90% of Bitcoin is already owned. I don't know if you'll ever see $3,000 Bitcoin again. US 10-year 3-month. Yeah, I figured that out. It's 1.003%. 10 T10. Yeah, I figured. I just went straight to Fred with it. I just Googled it. Worst analyst ever. Yeah, I shouldn't have said that. It upsets me because I know what he's doing. He's not trying to help people make money as a trader. He's trying to sell you products, right? He's an influencer. That man does not make 1 single cent from trading. I'd bet a portion of my net worth on it that he does not trade. He makes money by selling you all stuff. You all buy stuff, he makes money. Boom. That's how he makes money. He acts like an investor, a trader, but isn't one. If he follows his own advice, he has been losing money all year long. That's how I know he doesn't. You can't just be that wrong all the time and act like you've never been wrong. You know what I mean? Like, and people keep following him. Oh, that looks good. I'll just click the follow button. It's disgusting. But it's the reality in the civilization that we live in now. You got people realizing that they could just be entertainers or Twitter stars, YouTube stars, and they don't even have to work anymore. It's insane. I can tell you one thing. You got to have lots and lots of views to make money on YouTube. I do not make money on YouTube. I think I make like $200 a month or something stupid like that. For the amount of time that you got to put in to do it, it's not a profitable scenario. But who knows? Who knows why people do what they do? I know he blocked me though. And that's good because now I don't have to look at his disgusting tweets that I know are garbage anymore. I love your realistic perspective. Market cap of gold last cycle 18. Yeah, it would have been a nasty return because Bitcoin reached $69,000 and had a $2 trillion market cap. So do the math. Just do the math. To get up to 7 trillion, that means it would have to 2x its market cap at least twice. So you would have to get up to 69,000, so double that, 180,000, and then double that, and then you would be close. So about 400K Bitcoin to get to a $7 trillion market cap. After the move it had already had. See, like when you're on log and you stretch it out, it looks beautiful, right? Nice and flowing. If you take it off log, that's what Bitcoin really looks like. That's what it really looks like. Right? So here's where you were. This from $3,000 to here was a 1,200% return. And people were looking for 400K Bitcoin. That's here. That's there. So after all of this monstrosity of a move to the upside they got, they were expecting this. On top of this massive move, right? From $3,000. That was a massive, all the way up to 69K. From 3K to 69K. A 2,000% run. They were looking for that. Not happening, man. Not. I mean, that's massive gains. Can it ever get there? Oh, yeah, I believe it will. I wouldn't be surprised to see Bitcoin trading at $400,000 in the next 10, 15, 20 years. You know, but that's all going to be dependent on what happens with risk and itself. All right, we're going to have to wrap it up. Been going on for two hours almost here. Any questions you guys got, go ahead and drop them in the chat, and I will answer them. Historically called a recession with 100% accuracy, says Michelle. Yep, it absolutely has. Yep, it absolutely has. The 10-year, 3-year. 10-year, 2-year, sorry. But you're saying the 10-year, 3-month has historically called a recession with 100% accuracy. Got you. So that's why it was a big deal. Yeah, I mean, like I said, I already believe. Let's try that. T103M. Be nice if I could save it. Yeah, there it is. Yeah. You just got to make your own zero line here. Wow, I had it. Alt H. Yeah. I'd like to be able to add this thing to the watch list. I'll add it later. Yeah. Mike's Way Jackson, me? I don't know what you mean by that. No, I'm not. I'm talking about a TA analyst. That guy, he blocked me. The TA analyst. I mean, I can't remember exactly how many followers he had, but it was up there, like 100K or something like that. So he just, I mean, if you use the 10% rule, if he just gets 10% of 100,000 people to buy his shit, depending on how expensive his shit is, that's where he's making his money, y'all. All them people that's got massive amounts of subs and followers, that's where they're making their money, not with trading. Your real traders, those guys get ignored. There's a couple of them I see all the time put up really good info and get like 20 likes. I have hundreds of thousands of followers. It's insane. I guess people just want the hopium posts and the bear market posts. Twitter and that stuff's a whole different world. I don't even like it. Miles, all right. Me and him, we had that out with each other for a little while, but once most everybody realized that I knew what I was talking about, because the market seems to keep doing what I say it's gonna do, then they'll have to respect that. But I've been wrong before too. All right, you guys have a fantastic day. We'll be back Thursday morning. I'll try to get here before a trade setup happens, but I can't promise anything. Links for the Discord and everything will be pinned in the first comment for anybody that's interested in that. You guys have a fantastic day. Make sure you all trade safe. Make sure you trade smart. And as always, happy trading, everybody.